Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Tuesday, and today was a pretty strong day. Early in the morning there was some news that Greece is giving some kind of proposal for some kind of agreement, and then, Germany said no, and they had back and forth all day long. And I will say, at least if you were short, you had a way to cover some, and if you did not want to chase the gap up, the day developed pretty slowly where you could have gotten involved in some decent positions. Or if you were still in them from last week and reduced a little bit into strength, you could have gotten back. So anyway, I'm not going to get into it. I just want to show you the charts because charts to me look pretty darn good. This was your red dog reversal right here. And then you had your quick move up. Remember this red dog reversal on Friday where a little too far, too fast, pulled in. We talked about what needs to hold in order to show some type of commitment here. Well, you had a move to the 8th day, held above the level that we were talking about, pretty impressive actually, and then closed relatively near Friday's high. So just turning up, pretty much if this was a chart of a stock, you'd be like, I got to be long this, so why not be long it, as far as the market's concerned? Unless tomorrow is a trap, unless, you can't play the market, to me as a trap. If, same way, you get an 11 versus 6, playing blackjack, you can't be like, this is a trap. The world wants me to bet double down. I'm not going to win. It's gone. Or you get, pair of aces versus 6. You probably have to split them. And then if you get another 6 and then you double down and then you don't get the hands you want and then all of a sudden you have a lot of money on the table and something happens, it is what it is. Then split them but don't double down. Do whatever it is that makes you feel comfortable. I'm not trying to relate the market to a blackjack or to Texas Hold'em. You get a pair of aces in your hand or a pair of kings, you can't say, oh, I don't want to, lose some of my money. You have to, that's your hand. So anyway, to me, this setup right here was one of those hands where if you were long into this and sold some and bought back, this is the hand that you have to kind of add. Maybe you don't get the follow through in the morning. Maybe we're down a little bit and then it trades through this and continues, or maybe you get that follow through. But ultimately, hopefully you made some adjustments if you were short, and then we'll see what the story is next here because, you have the high here of, what is this, 2090, so you have a middle of about 20 handles to there, and to me this looks pretty good. You go to the IWM that lagged a little bit today. It too, still decent. It likes to mess with everybody, and you had your red dog reversal here, putting a little reversal high saying it needs a rest, and then held higher once again with another one there. So we'll see what happens if this builds a nice flag to then get to those highs. Let's look at the mid caps. Mid caps also, could have been a breakout failure. That's what all the bears were talking about it, but it wasn't a breakout failure. It was a breakout. Look where it came from with this red dog reversal. So held it, turned up, more constructive than not. And then the Qs also, nice bar through the highs. You look at this downtrend and it's just coming above it. Granted, could it fail? Yes, but this is the type of trade that you want. Here was your red dog reversal. Here's your pause. It reversed here. You could have picked your spot intraday to get involved, and it closed pretty well. And it does seem like it could be going. Do we get inside day tomorrow? We'll see. But does it pay to be long and have some kind of portfolio approach? It feels like it. Going to stocks, Apple. I tried to do my best to keep everyone in it, for today, because I know for me, I was the same guy trying to buy it, to get through this 120, and I was getting worn out, and I'm like, I should have just been long versus the earnings gap and tried it a few times. And then yesterday when it perked up, I think I sent a tweet out or two saying, wouldn't it be so cute if tomorrow when all the fast money doesn't want to trade it, it just goes and doesn't look back. And I put the chart up and mentioned it in the Morning Call Express this morning. Hopefully you follow us, because today will end up being a good day for some of those who do. And then you look at it, some people the day after, okay, it held the earnings gap. You put your long inverse at and just let it go. And if that's you, congratulations. For those of you that might have done that and then said, I'm going to buy it through this 120 and lost a little bit of money, those few sessions today, you could have came in long. It gave you a quick trade through that 120.51, another $1.50, so you could have made your money, and that's where it closed. Some people think that this is a cup and handle type pattern where here's a cup, there's your handle above the breakout of 120. So you go 105 to 120, 15 points. You flip that over, gives you a measured move north of 130. So if you're on the virtual trade floor, you see someone asked me what I did with my options. I haven't done anything with my options yet. I bought the 120s for March when it was right around, I think, 117, 118, so I didn't have to deal with the noise, so I could trade it. Tomorrow, if we get another up day, maybe I'll turn it into a call spread. So stay tuned. As far as some other trades, a lot of people made some money in Netflix today. Nice looking bar. You had your press over the earnings day high, then it consolidated for a while. You had this small bull flag into the 8-day, caught up, and boom. So tomorrow we'll see what happens. If the market opens up and you took it home long, chances are you'll get a nice little trade. If the market opens down a bit and it opens down, perhaps you could buy it through this, which you might even get a better trade. Amazon still consolidating, hasn't woken up yet, but all in all, you look at this and this high beta name looks pretty healthy too. Cleared this, held this, cleared this. Now it's flagging again, so we'll put this on the radar for tomorrow. Google, it's gotten me so many times, and this isn't as strong as the other ones, okay, but it's below all the moving averages. But you did get your earnings move. It did hold in here, and today closed for the first time, on the highs. So I took it home, and I'll figure out what's next. I do think worst case scenario, it tries to test this, the 543, but I'm thinking in my head, why wouldn't it at least test the 200-day? It's just perking up, and there's still some decent news around it. I know it's not growing the same way it was, but it makes a heck of a lot of money, and it's worth a try again. I tried it on this day, and I lost a little bit of money. That's actually the only day I really tried it was Friday. It hurt me. So I know today, if I didn't go back to it, and then it went to here in the next few days, I would have been upset. So the old Red Dog would have said, oh, on Friday it got me good. I don't want to be involved. The new Red Dog says, you know what? It wasn't ready that day. This day, it seems like it's ready, so I'm going to go with it the same way. Maybe the old Red Dog would not have went back to the stock in Apple and said, you know what, I bought this 3 different times at 120, got a little chopped up. I'm not playing it for a break above 120.51, and then we wouldn't have made the cash flow on that and just sat on the option. So anyway, you got to evolve a little bit. The market doesn't do things exactly when you want them to. It does it when it wants to, and that's when you got to get involved. Let's see what else. Baidu, I think some people were pointing out had a decent day. It's still in this range. Twitter, kind of funny, I'm not going to name names, but someone out there was, on the Twitter sphere saying they were shorting Twitter, and then all of a sudden a friend of his said, I'm selling it, and I tried, and people lost some momentum. It got below this, what is this, 48.80, not 48.80, my eyes, 45.80, and then closed okay. Another day or so of that, and I will be buying this thing. I didn't buy it today. I had the options into earnings. I started it here, sold it, letting it prove that it could hold this earnings gap. And then, especially if it starts taking out this 47.60, I'll get in there. If Mr. Short out there, who's pounding the table on it, can't get it down, and if his friend can't get it down, chances are it's going to go higher. Same gentleman, I'm not going to name names, said Apple is rotten to the core. I think right around. I don't know exactly where it was, but all I know is, I think when it was getting above this, I was loving it long, and it gave you a nice move. And then even after earnings last time, and for some reason I always feel like I'm fighting somebody when I love Apple. And it was great here, and I was buying it in here, and everyone's like, oh, well, someone else doesn't really like it. Well, you know what? Then I don't know, do whatever it is you want to do. So back to what I was talking about. Just because some people out there, push their book, don't let it shade your judgment, let the stock speak for itself, and as of right now, it did hold the gap, looks fair, so we'll see what happens if it could start to continue above that. LinkedIn held in much better, a little wishy-washy. It's hard for LinkedIn lately to trade it. It's so thin and wide. It pushed through, didn't really have much follow-through, but whatever. Facebook, I'm still kind of broken here, but did give you a little bit of follow-through to yesterday's RDR. People were like, oh, was that an RDR? I'm like, yeah, it kind of was. So it gave you a little 2-day cash flow move, but still so much noise coming into this area that it's just a trade. It needs to really prove itself. It shouldn't be your focus. Then what kind of was moving around today? Oh, the solars, that flow, I got to give you credit there. You were on top of that news with Apple real early, and went back and forth. And then as a trader, once you see news come out, you could see if the volume stays, and the volume stayed. And FSLR, I didn't take it overnight, which I probably should have, but gave us a nice intraday trade. And at this point, maybe the solars are in play tomorrow, closed pretty strong. It's got some room up to perhaps 50-50 and maybe even the 200-day. CSIQ, which has been the strongest solar stock, nudge its way above. Let's see if that takes back the 200-day. What else? What's Solar City doing? Yeah, not much. All these solars are hanging below the 200-day. And they were a little weaker because of the weakness in oil. Look at oil today. Just so you guys see, these red dog reversals kind of helpful. You had a push through failure here, or it didn't even make it through, and then you had some weakness. But same way it held here, maybe it holds again starting tomorrow. So we'll see what happens. I think it was a little bit more easier to see in the XLE. The XLE, pushed through this area and couldn't hold. Either could ExxonMobil after a big move from here and after a bigger move from the red dog reversal. It gave you some follow through to the downside today and then came off the lows. Pretty resilient again. What did it hold? It held the level we were talking about. I'm like, it has to hold 78-ish to be any good. Held in there with some time. It still looks okay. As far as the banks, Citigroup was upgraded today, and it happened to, I guess people heard it was coming or something because it was the only strong bank yesterday. Opened up and was sold off since. Has some room still to the 200-day. Morgan Stanley acting a bit better. Green day. Seems like you could watch this pivot here. Goldman Sachs has been somewhat the strongest because I guess you have the index buying also. Starting to look better. First time in a while that you had an igniting bar, held the top third, broke out again and held it again above some moving averages. So something there. As far as the TLT, the accelerated trend broke. We outlined it. Some of you guys got out if you were long. Some got short. And if you did so, it's getting interesting again to figure out what could be next. Okay, we've looked at this trend many times. You had your stretch capitulation move there before it had to consolidate again before getting above the 8-day and 21-day before going. You've had lots of little trades here. If you're a trader, right here went to the upside. Again, consolidated. This was your next trade. And then from before January was not below the 8-day this entire time. Then finally broke below here. So on this day is your day to say, okay, something changed. Has the TLTs been below the 8-day this entire trend? No. Has it been below the 21-day this entire time? No. Two things to know as far as trading trends, charts, stocks, whatever it is. And so you got out right here. If that was you following this trend. Listen, if you follow bigger trends, and you've been in this for multiple years, okay, that's different. Maybe you can go like this and you still don't care. Maybe you follow it from here and you still don't care. Most of the people who trade with me and trade things that move and like cash flow and like to be in things that are above the 8 and 21 day, probably were in it on this trend and that one broke. Okay, now it's all the way down here, getting close to the 50-day. So if you did sell it in here or you got short in there, you have the luxury of looking at it around here. I did say today if you were short, maybe cover some because sometimes it's gappy or whatever. But now the moving averages are curling down. Not above it, below it. So anyway, that's only if you look at trends and you're not a chart chaser or whatever people like to call people that use technicals and analytics. As far as what else was going on to the IBB, kind of interesting. It's been sort of broken and loose, and you do have somewhat of a wedge here where it's going to try and see if it can get back on its game. So today it looks a little interesting for maybe tomorrow. Some of those stocks did turn up today. Kite gave you a day one after, remember this wider range bar here, that's when it got loose and wide, and this trend changed from being above the 8-day this entire time. Loose and wide, ended there around 75. If you got rid of it around here, maybe you try it again here. Decent day one. Juno also looks like a decent day one. Might take some time. This is when it was pent up, had a quick move. Here was your king and queens reversal to get the hell out of the way. Broke the trend, and now it's trying to perk up. I still think there's a lot of shorts in there, so it'll be interesting if we can get above this. We talk about day ones and what could ignite a move, and those of you who are in CyberArk from my 2015 thesis, I talked about it waking up here. This is when it woke up. This was your day one wake-up call. This is when it held in here, and here's your follow-through. Nice move, clean. Now let's see, maybe it holds 40 for a little while and goes again. Here's resistance if it opens up, and then here's the highs, which we talked about it getting over. FireEye, which I'm in the options of, has earnings on Wednesday, so I don't trade stocks into earnings. Maybe I'll trade it after, or I'll just sit in the options. And this 37-ish is your next resistance. It's got to take back the 200-day, and I think there's room into the 40s if they deliver. If they don't deliver, the earnings aren't going to be. The options will be worthless. But I'm in the camp that I think it goes higher. The stock was battered and bruised because of a lot of bad deals, a lot of misplaced stock. Again, this also is a good lesson on trends. IPOs are awesome when they first come public because there's thin floats and it has no memories. You had a gap up here, pulled into the 8-day, nice breakout, consolidated again above the 8 and 21-day, another breakout, and then look at that, gap up king and queens formation with a gap down. So right there, that's your king and queens island top. Get the hell out of Dodge, even if you had to get out down here. And if you were in it on the accumulation phase, who cares? Then again, it broke right there and hasn't really seen a friend since. Fast forward to where we are now, where a lot of people have been, I guess, accumulating this thing, cleaning it all up, and now it seems as if it could be like a treasures for trash trade. It's still a little risky, so maybe buy some in the money options and figure out what's next. Lots of different ways to do it. So we'll see what happens. Markets, most sectors closed all above that downtrend, all a little bit above the resistance. That's been tough. Yes, there's still a lot of headline news. There's still a lot that you have to absorb if something gets out there. This RSX reversed today. I'm in it, and I'm hoping that maybe there's a ceasefire and some sanctions lifted. And someone on the chat room called out that a lot of the 18s were bought for Friday, and that's up here. So we'll see. So it's still nice channel, holding in well above the 8 and 21-day. And we'll see if it continues. Most of the time we were trading it was in here, which was from 16 to almost there. So decent percentage so far. We'll see if we get some kind of follow through. So lots of things to do. Lots of things to do if you have some quick feet. You use chart patterns. You move and groove through sectors. You be long, short. Use a tier system versus versus not doing that. Have a good night. I'll see you tomorrow.